Okay, good morning, everyone. Today is the 23rd of August 2024, and I'm happy to be with you all today for today's episode of the Market Snapshot. So, for today, markets will be focusing on the upcoming Jackson Hole Symposium. Yesterday, we had a couple of Fed speakers who again indicated that they are likely to stay data dependent when it comes to looking at rate cuts. And of course, some of those remarks allowed us to see a bit of a recovery on the US dollar. That was towards the beginning of the US session. For now, the markets are looking a bit indecisive as they wait for the Jackson Hole Symposium, which is to kickstart today. And of course, we shall be getting some comments from some key people like Jerome Powell, and of course a few other central bankers. That is, if they'll be available there. So let's just go through what we can expect to see on the charts from today's Jackson Hole Symposium. Expect to see on the charts from today's now, going through the Jackson Hole, for those of you that do not know what the Jackson Hole is, so Jackson Hole is a place in the US where central bankers and economists and policymakers normally meet every year for them to go over the economic projections, to see what they expect, to discuss different agendas on the economy and on economic policy. So usually this Jackson Hole Symposium is I wouldn't say it's an event on the scale of FOMC, but we usually tend to see a lot of reactions, especially from the comments that are made by the central bankers at Jackson Hole. So this year, the focus of the symposium is going to be reassessing the effectiveness and transmission of monetary policy, and of course, yesterday was the first day of the Jackson Hole Symposium. Today is the second day, and today is when Powell is scheduled to speak. And of course, tomorrow, 24th of August, is going to be the last day of the symposium. So, as you can see, these are different topics that have been handled in the previous years, rather, different themes that have been handled in the different years from this symposium. Now, going on the calendar, we can see clearly here that Jerome Powell's speech is expected at exactly 5 p.m. today. His speech, however, we might have a pre-organized statement, but it's very likely, especially since most times when Jerome Powell is speaking, we normally get updates from the Jackson Hole as they come. So some of the comments you're going to be waiting to get from Powell are going to be comments on rate cuts and on especially on their direction for monetary policy. If we get some bit of hawkish comments from Powell where he indicates that the pace of rate cuts may not be as aggressive as expected, some of that is likely going to be taken as a bearish sign for the risk on currencies like the pound, like the euro, and we could potentially see some buying coming in for the dollar. However, as of now, where we stand is that the markets have already priced in as much as about 100 basis points of rate cuts for this year. And of course, first rate cut being about 25 basis points in September, followed by about another 75 basis points later in the year. So today's main event and what most of you need to focus on today on the charts is the comments from Powell. So we are most likely going to get some very good volatility for trading between the hours of 4 p.m. to 6 p.m. and possibly even up to around 9 p.m. depending on on how big the speech is going to be. Now, after Jerome Powell, we're also going to get some remarks coming in from Lagarde, who is also going to be present at that same Jackson Hole Symposium. And some of the comments also from Christine Lagarde are likely to also affect the markets. Now, we got some comments today from Bank of Japan MPC members, and again, they were indicating that the Bank of Japan stands ready to lift rates if the inflation sustains. The Bank of Japan has been having troubles of inflation for almost 2 decades, and of course, recently we have been seeing that inflation starting to recover and going above their 2% long-term target for inflation. Now, this of course is one of the reasons or the basis for them to start hiking rates. And if you check on your charts, you'll notice that we've been having some very nice setups for us to sell, USD JPY. As you can see, USD JPY has been in a technical bearish move since around the 24th of July. And of course, on the 31st of July, when the Bank of Japan took that they actually took the rate hikes, we saw a sharp sell that took the USD JPY all the way down here. At the moment, it seems to have formed a bearish flag that you can clearly see in the blue, and we seem to be continuing in that downtrend. Now, today, 23rd, we also might get some movements coming in on the yen, especially since the MPC members are going to be meeting some of the members of the Senate. So keep an eye on USD JPY. We might get potential moves to the downside, and possibly, of course, if we do not continue here, we are going to see a bit of recovery for it, possibly moving to the upside. Now, looking quickly at what the markets are looking like on the different assets, we have a variety of price action here. Silver has been having a hard time. It has a handle at around 29.800 area there, where it has been moving to the upside, but it has failed to break $30 an ounce. Despite this, we are seeing that its counterpart gold has been staying mostly bullish. We had a sharp drop on gold yesterday, where we saw gold moving to around 2,470 before recovering sharply to move back now to where it's currently trading at. Looking broadly at the forex pairs, especially the majors have been trading mostly higher against the dollar, and of course all that is because traders and institutions are increasing their or cutting back on their dollar long positions in the short term and medium term ahead of the highly anticipated rate cuts from the Federal Reserve. The indices had very sharp sales yesterday. We saw a sharp drop on the Dow Jones that dropped about 100 points, recovered quickly. Then we had also a drop on Nasdaq. Nasdaq, of course, is dropping ahead of Nvidia earnings. Nvidia is expected to report earnings on the 28th, and of course, we are going to go through what we can expect from the Nvidia earnings. That is next week on Wednesday. The Euro stocks are also up. The Euro stocks have been sharply rising. Quite a number of them are up, and of course, we are seeing how that is going to continue into next week. DAX, of course, is almost about to break a record. It's currently trading at around 18,552, and we've been having a very sharp, almost close to linear momentum on the DAX that has taken it from this level all the way to this level, and it's about to break its all-time high before it continues moving higher, possibly to 19,000. So let's cross over to the charts and quickly see what the markets are looking like. So starting off with gold, which I'm sure most of you are focusing on. Now, gold yesterday had a nice drop. When we met on Wednesday, I had indicated to you that gold had actually created a lower high around this level, and we were looking to sell it at that lower high. It was a very nice sale, and of course, I'm sure if you guys took it, you're able to take gold all the way to that fib retracement of 22,493. Now, from this level here, we have seen gold sharply rising from 2,470, moving to the upside. I'm expecting that gold is going to make another attempt to either take out this area here where we have lower highs, and of course, if it does not take out this level, then I believe gold might be trying to make another attempt at a higher low before selling. Now, today being a Friday, and of course, today expecting comments from Jerome Powell, the movements on gold today are majorly going to depend on some of the comments you get from the Fed chair. If Jerome Powell gives us dovish comments that will support gold, most likely gold is going to rally, and we should see gold heading back to that level of 25,031. Gold is still looking very, very bullish, and you can see that it has very, very strong demand along those levels of the fib on the H4 time frame, around 2,478, 2,470, And of course, we are seeing that there is still a gap that it has to fill. But how gold was able to hold price action within that imbalance candle that we had on the 16th of August is indicating to us that buyers are still active on gold, and it could possibly make an attempt either at this level or possibly at this level before moving to the downside. GBPUSD also has quite a number of imbalances. So if you look at our Fibonacci retracements here, you can clearly see that this is looking strong bullish. We had a golden cross again, just like we talked about on Wednesday. It briefly had a push above that level that we spoke about, where we had a double top from the 17th of July. Then, of course, it had a break, and then it had, sorry, not a break, it had a push to the upside, then a move to the downside, slight retracement, then we had another push to the upside. Now currently GBPUSD is trading within this range here, and I'm waiting to see what happens. Yesterday I actually thought that we are going to see a continuous sell for GBPUSD. That did not happen, and ideally what happened there is that we then saw a very sharp move to a very sharp move to the downside, then immediately moving to the upside. So today we are going to wait to see what comments you get from Jerome Powell. If Jerome Powell tells us that the rate cuts are not yet, of course, the kind of guidance you get from Powell is normally vague. So he will tell us the Fed is ready to act as soon as inflation continues to come down to 2%. If you get comments maybe for him saying that the labor market still looks solid, that would mean that he's shrugged off the revision. Recently, NFP numbers were revised, and they were revised. Currently, we are looking at about 800,000 jobs were actually removed from the NFP numbers. So that means that actually the labor market in the US is much weaker than it's looking. Now, if Powell comes and says or comments that despite that, the American consumer is in a good shape, labor market is still looking strong, I believe that's going to be a buy for a sell for pounds, possibly also a sell for euro. So at the moment, I'm really waiting to see. We're in a range, so we need to either break structure here and continue to the upside, or come and of course break to these areas here. So for today, the first area that I'm expecting pound to possibly move to is going to be this level here, where of course we had demand. So we came here, slightly broke below it, and of course broke above it. So the earliest buying momentum we are going to get for this pair is going to be around here. Okay, but for now, we have to keep an eye. So we either get a break to the upside or a break to the downside there. Now for euro dollar is also stuck in a tight range. You've seen here I've drawn my Fibonacci retracements, setting my swing low around this demand area here. So you can see the kind of structure euro has had. We had a move to the downside, we had a break to the upside, then of course we had a slight move here, and then now we are all the way up here. Now from where the euro dollar is seated, there is a bit of ranging here also in this area here. Yesterday we had a very sharp liquidity grab around here, where we saw the euro selling from that area before moving down. But after that, we've seen that despite us having the sell, we've got a number of liquidity grabs along this area here of around 1.11041. So for us to sell, we need to see a break below that fib retracement of 23.6. And of course, after breaking below that fib, then I believe the next area for the euro to sell to is possibly going to be towards the next level of the fib, which is 38.2%, somewhere around here. So if we move to that level there, we are going to be targeting around that level of 1.06, 1.10621. Okay, so we have demand currently at this area here, and of course this is why the selling was a bit hard, because we had a sharp sell down here, demand picked up, took it back here, we had a grab, came back down here, demand picked it here. So if I'm going by just if I'm just going by how the candles are being printed, okay, it almost seems as if Euro USD has created a lower high. That's along this level here. And I think now for the structure to complete, it's going to complete with a wave to the downside here. Now, again, we have Jerome Powell speaking. So if Jerome Powell maintains the dovish comments that we've previously had, then I believe we are going to have a push to the upside. So that's what we're having at the moment. Awesome. Now, um, let's go to USD JPY. So for USD JPY, we have a range at the moment. So it's currently ranging here, but I'm expecting soon we are going to have a continued move towards this level of 141,667. Awesome. Question time now. If you guys have any questions, you can send in your questions and I'll be happy to go over them. Questions. For the moving average, I use 50-day and 200-day moving averages. The 50-day is my short period moving average, and the 200-day is my longer period moving average. Dovish comes from Thomas. If I recall very well, this is the second time you're asking this. Okay, dovish comes from the animal dove. I think you know a dove. It's a peaceful animal. Um, it's a peaceful animal, so essentially it's usually perceived whenever we hear some especially central bankers, the kind of comments that they make. When the comments are good for risk, then we normally say the comments are dovish. Then of course a hawk, I think you know a hawk, it's a carnivorous bird. Hawks, of course, for them, you know. Oh yeah, you can actually find these definitions on the Bullish Banter social media. Okay, Thomas Machuma. So you just search for Bullish Banter on socials, and you'll be able to find them. Yeah, awesome. Most promising pair to trade for me, it would be gold. I'm keeping an eye on gold, as you can see there. Uh, I'm waiting to see how the price action evolves for gold. I'm expecting a possible move back to that area there where we had our lower highs. As you can see, the lower highs were formed along these areas here where you see my arrow there, 1 2. So I'm going to be looking at gold moving there. Just in case gold does not move there, I think the next area for it is going to be if we look at it completing its structure, it's going to look a bit like this. We're going to have something like this. Okay, we have a move up. So somewhere around here, if we don't reach this level here, we might get a, a liquidity grab around this area here before selling. Okay, now trap skate, you normally have good questions when you ask that most promising pair to trade. So for that one, ideally, what is going to drive price action today is going to be the Jerome Powell speech. Okay, that's why if you look at the price action, you can see the price action is a bit on tenterhooks. We are waiting for Jerome Powell. Okay, so depending on the comments we get, so if Powell mentions things like some of the recent comments he's made in the past, things like the decision to cut rates, or the decision to cut rates is going to be one that depends on data. The labor market is in a strong shape. The American consumer is in a good shape. The Federal Reserve will take its time in deciding, vague guidance. So like it keeps you guessing about are they going to cut or they're not going to cut. Now, on the side of the markets and how the markets are perceiving every comment coming out from the Fed, they are perceiving their comments as dovish. Okay. And actually, right now, the markets have priced in up to 100 basis points of rate cuts, 25 basis points in September, 55 basis points between October and November. And of course, December, we have another 25 basis points, totaling to a total of 50 around 100 basis points. So the markets are actually disconnected from Powell, but today we are going to have our focus and attention to what Powell is going to say. Awesome. Why do markets anticipate a 50 basis points rate cut come September? Um, there are several factors. One of them is because of the data that we've been having. So let me just take you through briefly about on that J squad. So we had data that came out on the 2nd of August. That was the NFP data. The NFP data was the lowest number we had since COVID era. That was 114,000 jobs were created, aside from the farming sector, were created in the US for the month of July. That number was the lowest since COVID. Now, what if you recall around that time, what happened is that we saw a very sharp sell for the dollar, and what started the sell for the dollar, the downtrend for the dollar was actually that NFP number. Okay. Now, after that, what happened is that uh, the Fed speakers came in and said that, look here, uh, don't be quick to assume that the US economy is in a bad shape because you're considering just 1 month of data, right? That's what they guided on that NFP number. Now, after that, and of course, after a series of other data we got, like the inflation data, the retail sales number, which came out, which of course, which was the highest number since 2023, we saw a retail sales increase of retail sales by almost 1%, the highest since 2023. So all these different sets of data, then of course, put side by side with the NFP number, gave, of course, traders an assumption that, oh, I think maybe we acted too swiftly without thinking, and perhaps the US economy is in a good shape, right? Now, the impact on the dollar or the DXY is not majorly because of the NFP number that we had on the 2nd of August. This downtrend is just the perception of the market that is currently looking into, that is currently pricing in rate cuts. Okay, they're currently pricing in rate cuts, and we are seeing how uh, people are starting to cut back on their dollar positions to move into other assets like gold, and also higher interest currencies, or currencies that might have higher interests for longer, like the euro and the pound. Okay, so the 50 basis point rate cut is likely because the markets are currently thinking the Federal Reserve has delayed a bit, and they are going to act a bit swiftly. The other one is also because of the US elections. If you look back historically, during periods of US elections, we normally tend to get much bigger size of rate cuts. So we are definitely going to have at least 50 basis points just squad there. So just what you are saying, the Fed has been data dependent rightly, and going to see data. It's, guys, central bankers are good with keeping us guessing. Uh, you know, that's how it is with them. They keep us guessing. It's like they will tell you, like, this is what they are thinking, but we're not really telling you what they are thinking. So for instance, like if we see Jerome Powell mentioning things like we are committed, we are committed to getting our inflation to 2%. The American consumer is in a good shape. We are ready to act as soon as the signs show. So what signs? And you ask, so what signs? And of course now, when Jenna is asked Paul this question, if you watch some of his conferences, you will notice that he actually does not give them what they're really asking. He keeps them guessing because it's not up to them for them to give you a very certain decision. Okay. Now the other thing, of course, is if you look at the time we're having the comments from Powell at Jackson Hole, it's today, the 23rd of August. We still have a number of uh, you know, data sets to be released between now and the next FOMC meeting. The next FOMC conference is going to be on the 18th of September. So between now and 18th of September, just squad, you have NFP, which is coming out, I believe, on the first week of September. In addition to that, you also have the CPI number, which is going to drop definitely before their meeting. So which gives them ample time. And I feel between now and then, Powell is not going to tell us what, they want to wait for. He's going to say they are going to stay data dependent, definitely, without a doubt. He's definitely going to say that they are still committed to getting their inflation down to the long-term target of 2%. They're still committed to their mandate of maximum employment, the same usual stuff. We'll be looking out for maybe a key new things, and of course how the Fed probabilities change. So all that will be what the market will be looking at. But again, guys, for us that don't really trade fundamentals, focus on price action. Focus on price action. Just like they say, cash is king, price action is king with trading. Trade what you see, focus on the price action. We'll definitely be able to tell how the markets have perceived Jerome Powell's comments just by looking at how the markets are moving. Okay. So I hope that helps, just squad. Mr. Thomas Machuma, I think we've Thomas, you are saying, yeah, so okay, fine. FX Spacer is saying that you might need to go and check that comment, but just to maybe say, I had already explained what dovish is. Hawkish, just like I said, hawkish comes from the bird. It's a hawk, and it's a carnivorous animal. And ideally, we normally have a few speakers from the 19 Fed committee members. Some of them are hawks, whereby whenever they speak, we normally see the dollar pushing higher, like the hacker, Bostic. I'm sure you've seen some of those people there. Then we also have the doves. So for the doves, for them, they don't normally push gold dollar higher. Whenever they speak, normally we tend to see a bit of a mixed reaction in the market. Fed Walla, I don't know their names too often, but there are quite a number of them. Yeah. So guys, I think yeah. So for the DXY, we can just go over the DXY briefly. Yeah, so for the DXY, this is how DXY is looking like at the moment. Okay. So again, if we are to go back to the recap we had from Wednesday, you can see the DXY seems to have formed what I call a double top here. We broke below the neckline around here, and then of course we have now seen the DXY in a nice sharp sell. Okay. Now I usually like using Elliott waves, but not too much. But if I'm to look at the potential target for the waves, we had a sharp drop here for the DXY, rallied a bit, moved down. So I'm expecting between now and possibly the end of August, this is going to be the next wave for the DXY. So it has already begun, since you can see that we have already moved from this point here up to here. So I'm waiting to see if it completes. If we move back here, if we get a temporary move to the upside, then of course I think now that would mean that euro dollar will sell, pound dollar will also sell, and I think that would also mean that we will also see a sale for some other currencies, like NZUSD, AUD USD. Most of those, I believe, we shall also see some sales happening there. So, guys, I think that's it. Thank you so much, everyone who was able to tune in for today's market snapshot. There's a new bullish banter uh, uh, episode that has been released. It's available on FX Spacer's YouTube, so you can get some time and check it out. It's called Female Traders Taking the Markets by Storm. I listened to it yesterday, and it's a really, really amazing episode. So go check it out on FX Spacer's YouTube. And guys, that's it from me. Have an awesome weekend, and we'll continue next week. Cheers, guys.